JD and all of these other China names are down big today. JD alone is down about 6.5%. And I have been very bullish on this stock for the past couple of weeks. As of right now, my position went from being up nearly about 40% of my calls down to about 20% of my call options. The goal of this video is to share why I am still bullish, what I am planning to do from this point forward, more importantly, what my stop loss is going to be, and why I think this breakout can still happen. Now, if you don't know who I am, my name is Peter DiCarlo. I've been a full-time trader for the past 11 years. I've grown my fund to over $5.5 million with only a 61% win rate, and all of my trading is based off of technical analysis and data. I have a very simple strategy that I follow, that I don't listen to the news. I don't care about the fundamentals of a company. I don't care about what's happening geopolitically. I have a very simple entry and exit requirements that you guys can learn completely for free. The link to our entire system, all of the indicators, all of the strategies, everything is down in the description for free. And I do this because it makes trading simple. It makes trading easy. I know exactly why I'm entering a position and exactly why I'm exiting. And so now let's go over JD, let's talk about this position and why I'm still bullish. Now, one of the first foundations to our trading system is that we only focus on trading bullish market structure. So bullish market structure looks like this. Price is breaking out to the upside, price will pull back into a higher low, price will break out to the upside again, pull back to a higher low, and continue that type of trajectory. Now, bearish market structure looks like this. Price sells off into a low, bounces but does not make a higher high, which means we have a higher low, and then continues its way down. This is not what we want to trade. Now, if we look at JD, you will see this entire sell-off that we had basically through all of the first half of 2025 was bearish market structure. But as of recent, basically back here, September 25th of this year, market structure shifted. Now, we don't talk too much about the indications of market structure shifting, but it's very simple. As we show, bearish market structure occurs when price is selling off, bouncing to make a higher low, selling off to make a lower low, and doing this. Structure will eventually shift when we break above the most recent swing high. In this case, if we were to break out here, this is a structural shift because we're no longer making lower lows and lower highs. We are now making higher highs. And if price pulls back to make a higher low, this is normally an indication that that structure shift will happen, that we will start moving away from this and start moving into this. Now, if we go back and look at the price action right now for JD, that is exactly what has happened. Price action was showing bearish market structure. And back here, as of September, we broke over that most recent high, which means we are shifting into a bullish market structure. Price should bounce here to make a higher low and then should break out to the upside. This would confirm the fact that structure is shifting. Now, I personally thought that price was going to hold about $33 to $34. I did not expect this drastic of a pullback today. I really thought that we were going to bounce here and then go for that move up to 40 much quicker than what is currently happening. So that is the first part of my plan that is already going wrong. Now, of course, we cannot predict what Trump is going to say. I traded the entirety of the first term. I understand that. And I know that Twitter fingers definitely comes into this and that it brings a lot more volatility to the table. Now, with that said, what I think is currently happening right now is we are getting a stop hunt. You have all of these people who have been going long on JD. This drop today definitely tagged out a lot of people for stop losses. But if you are somebody who follows my trading system, you actually know that today is the best time to go long, right? While everybody is actually stopping out, today is when you should be looking to go long or actually adding to the position as long as you're not over leveraging. We need to use proper risk management, but this is the time to be leveraging down. The reason for that is price is actually pulling back into our institutional buy zone and our smart money zone. We talked earlier about that market structure. And when we're looking at bullish market structure, we want to be buying the higher lows and selling the higher highs. And you can see here that if we actually use our smart money principles, this would give us a buying zone between $32 to lows $31, meaning that this is the time to load up for the next potential breakout to the upside. Now, if you want to learn how to actually draw these smart money levels, it is part of step 3 of our trading system under Smart Money Mastery. This course specifically will show you how to draw these smart money levels and, more importantly, explain mathematically why this is normally where institutions will step in. So for me personally, I think this is a really good time to be starting a position or averaging down as long as it's responsibly on a position that you currently have. If price continues to drop to $31, I am going to average down on the call options that I currently have. So I'm going to set an alert right now. If I didn't already have a position, I most certainly would be starting one. Now from here, let's talk about potential stop losses. The way that we would set this stop loss is to look at that most recent swing low at $29 and set a stop loss under that. The reason for this is if price actually breaks under that low, this is going to be a shift of structure. Structure will no longer be trying to flip back bullish, will continue to be bearish, and price will most likely continue to burn. That means that from this point here down to that stop loss, we have about a 6.5% move to the downside. And we have to assume that that is going to happen, right? Whenever you take a position, you're not planning on winning. You should actually be planning on losing, which is how you can manage your risk better. From here, just back up to where previous high is about 16%, which means we'd be making 2.5 times what we are losing, which gives us a 2.5 risk versus reward, which is very, very healthy. Now, from this point, I do think best case scenario by the end of this year, price is going to be back up at $41 to $43, which would give us an even crazier 33% return to the upside. So for me, each and every single day, I will take a trade that is meeting our requirements, sitting in market structure that's bullish, inside of an institutional buy zone or smart money zone, with a 33% upside and 6% downside. Even if I lose money 50% of the time with that setup, I will make a killing long term. And that's the most important thing about doing this. It's not about being right today. I've been doing this for 11 years and I'm wrong a lot. But it's about being able to play the strategy out over the long term, to put the odds in your favor, to play probabilities, and to make money long term. I hope this video helped. I'll see you guys next time.